Hey everybody, Chuck Barone. It is Tuesday, January the 23rd, 2024. Let's bring everybody up to date today. We got a wild day rocking and rolling as usual. Before I get started though, let me take a half a second. Welcome everybody to the show. And as always, thank you guys for your support. You guys being here every day, hanging with us, watching these videos, means the world to us, guys. We appreciate that support immensely. Anyway, let's get on to the markets today. As we know, market's been rocking and rolling. Stock market's been rolling up nicely. Big optimism that this is going to be a great year for the economy. Rates falling, everything looking just perfect. And of course, as you guys know, if you've been listening to this show for a little while, when I hear perfect, man, nothing ever ends like they think it's going to. And, there'll be some twists and turns. I guess we're going to have to see where those twists and turns take us. But I just still can't wrap my mind around this perfect soft landing. We're going to have this big inflation bump. Everybody's going to freak out. It's going to drive the economy crazy. Tank real estate, crash commercial real estate, and somehow record levels of debt and all the negative stuff we talk about in this show all the time that's happening in this country. Somehow or another, everything's just going to work out perfectly, and we're going to have this wonderful, happy finish, and everything's great. I hope it happens, but I got to see it to believe it. All right, anyway, let's talk about today's market. Kind of a weird day on the market. You had mixed results today. The Dow Jones falls, down 96 points, 37,905. A great number for the Dow, man. I mean, the Dow went from 37 to 38,000 in like 30 days. It was boom. The NASDAQ, even though the Dow falls today, that's the narrowest view of the market. The NASDAQ gains. NASDAQ up 65 points, 15,425. And the S&P continuing. This is the broader market. Still rocking and rolling. S&P up 14 points today. Another gain, another record. 4,864 on the S&P 500. So the stock market, all of it, all across the board, looking very positive right now. You got earnings coming in okay. I don't know if their earnings prospects for this year are as great as they were last year, but things seemed to work out last year in spite of all of the feeling that we were on our way into or in a recession, the phantom recession that never really came. And this year now, so maybe that's the funny thing, right? Last year, everybody thought it was going to be a terrible year. It turned out to be a great one. This year, everybody thinks it's going to be a great year. We'll see. All right, anyway, so stock markets still up at top shelf, high numbers. In my mind, not the greatest of buys right now, unless you really believing this story of the perfect landing and the markets are just going to go straight up forever. Okay. Bond market today. Well, another weird day in the bond market too. Just quieter though, nicely. But the 10-year rises 4 basis points, sitting at 4.14%. The 2-year flat, 4.37%. So now you got 23 basis points, the inversion narrowing. I can't wait to see what it looks like, say 6 months from now, where you have the Fed trying to push down short-term rates. And you're going to have a big spike in long-term rates. It's going to go from inverted to parabolic. It's going to be crazy looking. Dollar today. The dollar up small, still holding its own. Fractionally at 103.55 in the index, a good solid number. The dollar's been strong in spite of, and not as strong as it once was. I mean, the dollar was really rolling when rates were rising. Now anticipating rates coming down, the dollar's been coming down, but now it's been moderating as they're kind of anticipating maybe these rate cuts aren't going to happen exactly the way we think they are. They went from predicting 6 this year, now they're talking about 3. They went from March, now they're talking July. So we'll see how this all plays out. It's going to be fascinating stuff though, guys, really. Metals today, even with a strong dollar, gold and silver have a little bit of a rally. Gold up $7.70 per ounce, sitting at $2,029.80 for an ounce of gold. Silver up 34 cents, a little bit of a rally we needed in silver. $22.40 for an ounce of silver. Still, in my mind, discounted at least 10% on silver. And gold, fairly priced, I think, right now over 2,000. That's where we need it to be. In spite of this stronger dollar. Now, don't get me wrong, if the dollar strengthens further, if there's an event and it looks like the Fed may not cut this year or may actually have to raise rates, you're going to see the dollar change. You'll see gold and silver change with it. Oil today falls 21 cents per barrel. Not really a big event in the oil market today. $74.55 for a barrel of West Texas Intermediate. Still right in that trough where we expect it to be, between 70 and 75. Until it breaks out either way, it's kind of this trading in a trough thing, you know. I guess you can make money on that if you're an options player. Knowing that once it gets to 75, it's probably going to come back down to 70, and vice versa. So it's interesting, but oil right there where we expect it to be. Bitcoin today continues its fall, down $801, now breaking pretty much well below 40,000, 39,155. Bitcoin in a little bit of a correction here after a big run-up. It's funny that Wall Street has their cliches for a reason, I guess, right, guys? And one of the oldest is buy the rumor, sell the news. It kind of looked like everybody was buying that rumor of the Bitcoin ETF like crazy. Some people, however, forgot to sell or continued to buy, while the guys who really know that market making some massive profits right now selling off. All right, news you need today. Let's talk about some stuff. We know I didn't get the show done yesterday, so big news coming this week. Data coming on Thursday and Friday. On Thursday, we'll get GDP. On Friday, we will get the PCE, the Fed's inflation gauge. Those are going to help us get an idea of where the Fed's going to go next. A strong GDP number and a good PCE number would point to cuts. I think we'll see where that goes. Of course, we'll be here to report on it. Commercial real estate. I've been talking to you guys about this coming collapse in commercial real estate, starting to pick up steam now. Cantor Fitzgerald, CEO, comes out today, says $1 trillion in losses coming in commercial real estate. Time to take a good hard look, guys, at your own portfolios. If you're holding anything that's in any way related to commercial real estate, regional banks, real estate investment trusts, anything that's stuck with commercial real estate, be careful, guys, because this stuff's going to come down pretty dramatically. You have rates high, property values falling, and you have $1.5 trillion in commercial real estate that needs refining over the next 18 months or so. Not a pretty picture, especially with banks looking at this with a jaundiced eye, right? Owners already having difficulty refinancing these commercial properties. It's only going to get worse. Now, these loans, you got to remember, a commercial loan, you buy a commercial building, typically the mortgage on that property is not going to be like a 30-year loan like it is on your house, okay? Typically, they're shorter term, 3 to 5 year commercial deals. So they're much shorter term. And typically, these just are kind of an automatic rollover refi. The bank makes money refinancing. The rates go up and down, but nothing dramatic. Well, this time around, rates have gone up pretty dramatically. So now you're looking at these lenders, right? They don't want to make these loans. Commercial real estate is really having some difficulty. The trigger gets set by these loans not being able to refi. Property owners being forced to liquidate, selling properties at fire sale prices, driving prices down, and the spiral starts, right? Now, who's at risk here? Well, real estate investment trusts and investors, obviously, but small banks and the regionals are they're the ones who are taking the brunt of this risk on this financing. They do not want to own a whole big bunch of commercial real estate. So they're looking at refining these loans, and so many of them coming due. They're looking at them very skeptically. You have vacancy rates rising for commercial properties all over the place. Office buildings, since the pandemic, nobody wants to go back to work. You have shopping plazas and shopping malls that are emptied out because people are buying all their stuff online now. They're not going to the mall. They're not going to the shopping centers like they used to. Vacancy's high. So what's the big benefit to lending to this stuff? Now, this has been going on for a little while. We've been talking about this on the show for, I would say, 6 to 12 months, somewhere in there. And we've known this is coming. But now it's really starting to pick up steam. We're going to read more and more about this. We're going to see more and more defaults. You're seeing this already. We've talked about it. Or, commercial landlords literally just handing the keys over. They're trying to refi. If they can't refi, they're done. They're done. So it's going to be a fascinating thing. The lenders, the banks, are in big trouble. Because if you have a guy coming to you who needs to refi, if you don't refi that loan, you're going to end up foreclosing on the old loan or foreclosing on the building, because those loans have balances and they can't pay those balances without refi or selling the property. Going to be fascinating times, guys. All right, so let's talk about the last thing we got today, this buy now, pay later. I warned everybody when I first heard about this that it was going to end in tears, and sure enough, the bills are coming due. Now listen to this, guys. These loans, which kind of caught on in popularity toward the last half of the year last year, they really helped boost spending. The sales numbers we've been talking about that were so surprising to me, they were up so high. Well, they helped in these buy now, pay later loans. Helped increase spending over the holidays by 14%. Okay? Now, this surge in debt, there's $16.6 billion in buy now, pay later loans. These are not long-term loans. They're not like credit cards. Boom, boom, boom. We're going to start having to pay right away. The bills are coming due. Now, this comes at the same time as you got people with credit card balances at all-time highs, at high record-setting interest rates. People, their bills on their credit cards going up even without using their credit cards. Credit card delinquency rates surging as we expected. I told you that was coming. Record debt always equals record bankruptcies. Well, now add on top all $16.6 billion in buy now, pay later loans all kicking in, student loans kicking in. The guy who's up in debt and is up to his eyeballs, the guy who's not listening to the advice we've been given, he's in deep crap, man. Because these loans have high rates. They're not typically reported like your credit card is to the credit bureau, so it's really difficult to accurately gauge the delinquencies in this type of loan. But studies have shown, listen to this, guys, studies show that people who are likely to use buy now, pay later loans are more than twice as likely to already be delinquent on some other credit product, a home loan, an auto loan, a credit card loan. So the people taking these loans out are not what you would call the best risks for lenders, right? Guys, I hope you've been listening to the things we've been saying and the advice we've been given on this show. Save as much of your cash as your income as you can. 10% is your target. Don't take on new debt. Invest your money conservatively. If you have existing debt, not only don't add on to that debt, but start to chip away at it, even if it's as small as $10 extra. Invest your money conservatively. Be a prudent spender. Everybody has to spend money. We all have to buy things we need, even things we want, but we have to do it prudently. Stop the impulse buying. Stop the stuff you can't afford. If you have a thought, oh man, should I do this? The answer is no. But anyway, that's it for the day, guys. We will be back tomorrow. We're looking forward to Thursday and Friday. Those are going to be the exciting days. Tomorrow we'll probably get a little bit of a lull, although we're going to get some news from New Hampshire later on today. And we could have the lineup set for this fall with Trump versus Biden to be president of the United States. Anyway, guys, that's it for the day. We appreciate your support as always. If you could, please hit the like button. It helps get the algorithms in our favor, gets our video out in front of a few more people. We'll be back tomorrow to bring you the news you need. Until then, guys, take care. Thanks.